Safe Harbour is an interesting one. In principle, I like it that directors are given the opportunity to try and reorganise it without the spectre of insolvent trading, because historically it's been the trigger. And a director would get a report say, look, you're in danger of insolvent trading. They don't want to take any personal risk or bank point administrator. Now Safe Harbour allows them to perhaps get advice and continue trading without pulling the trigger on an insolvency. But what I don't like about it is the fact that if you go into Safe Harbour, you don't have to tell anyone. Even if you're a listed company, you don't have to tell anyone. You're getting this advice around insolvency and how you're trading. Really, you're on the edge, or even insolvent, right? But don't have to tell anyone, even if you're a listed company. I mentioned Mosaic Brands and Booktopia, two examples of where I know listed companies went into Safe Harbour and it didn't go well. Went into Safe Harbour, they couldn't turn around, they fell over. I understand the principle around why they shouldn't say to creditors they're in Safe Harbour, because creditors are going to go, whoa, I'm not going to supply you anymore. But I'm torn between whether there's an obligation to share with creditors you're in Safe Harbour and let that creditor form a view, because the creditor continues to trade whilst in Safe Harbour, where they're potentially insolvent already, So I think it's just a tough one.
Yeah, it's always a good result for them if they can get a deed of company arrangement up. And what we're talking about there is after an administrator is appointed, that the creditors agree to a deal where some money comes in, they get a cents in the dollar result, and the company can keep trading on, and there's no problems for insolvent trading or preference claims or anything like that. And so we do see often now where it goes into administration, an entity is prepared to buy the business, and the administrators will say to all the creditors, look, we've got this buyer, it's you're going to get 10 cents in the dollar out of it, but we don't really have any other buyers at the moment, or we can wind it up. With this Safe Harbour timing, they may have had the potential there to sort of see what's around in terms of buyers and then put up the deed of company arrangement later on. You get left with a cents in the dollar result, and it could be on that trade that's happened in those final days or the final month or so before the administrator was appointed, where they were insolvent. You're none the wiser and selling to them.
Yeah, so you're trading while they're insolvent unknowingly, but yeah, I think it's a difficult one.